talk about, what is it? And so really the buzz of this court case has to do going all the way back to March of 2017. And so the South Dakota 6th Judicial Court ruled that the state's economic nexus legislation was unconstitutional. And so essentially that law was attempting to put in place rules that allowed South Dakota to tax out-of-state sellers. But on September 13th of that same year, the Supreme Court struck down that same legislation. And so what they did was kind of set up the ability for it to go to the U.S. Supreme Court, and they agreed to take that case up in January of 2018. And frankly, many of us were a little bit surprised by that. In the past, the courts hadn't shown that they were really willing and ready to look at these sorts of cases or address this, but they did. And so it went in front of the Supreme Court essentially earlier this summer. And on June 21st, they found in favor of South Dakota and overturned the long-standing physical presence nexus rule from 1992, Quill versus North Dakota. And so if you're not familiar with what physical presence was, essentially that was, are you doing business in that particular state either through a brick and mortar facility, maybe it's a storefront, it's a warehouse, it's just employees being there, maybe there's certain activities such as trade shows, et cetera, that would constitute physical nexus. And so essentially that is what Quill versus North Dakota defined, and now South Dakota, with that being overturned, has the authority to impose sales tax obligations on out-of-state transactions. And so who does this affect? And really all remote sellers, both online and offline, who are not registered with South Dakota, who meet their threshold requirements, are affected. The effective date is still yet to be determined, so there's things that are still yet to be worked out. Though, South Dakota has not published anything explicitly stating when the law will go into effect. But again, the most important takeaway here is that Quill was essentially overturned. And so with physical presence no longer being the deciding factor in that state in particular, and we're going to talk about how that affects other states, sellers should be aware now that in the near future, South Dakota is going to put the economic nexus rules into effect on a date yet to be determined. We'll talk more about economic nexus and get into that here in just a moment. And so here essentially was the ruling, and they found that physical presence of Quill versus North Dakota, that ruling to no longer be sound, so found to be unsound and incorrect, and so those are overturned. And so that essentially didn't necessarily make new law, it just simply overturned the previous ruling and allowed South Dakota's state law to go into effect. So a couple things to think about in terms of the details and how it might apply to you. So if you're already registered in South Dakota, does this court decision apply to you? Well, not really, because the ruling doesn't affect any company already registered and collecting in South Dakota. So it's just kind of business as usual for you. And does the ruling only apply to online transactions? And no, the ruling applies to online and offline sales. So it could be catalogs or phone sales, for example, that would be triggered as well. And does the economic nexus rule apply to non-taxable transactions? The ruling actually doesn't change what is or isn't taxable. So those rules essentially stay the same. Now, the rule adds economic nexus to the existing list of nexus creating activities. So it doesn't change anything in the way of physical nexus. That still applies, obviously. But now we've added to the list nexus creating activities having to do with these economic activities. So the South Dakota law applies to taxable sales made to consumers. It doesn't change what is tax exempt, so we just talked about that. It does apply to service providers, so not just tangible property, and it's going to apply to manufacturers and wholesalers who sell direct to consumers, and that is really kind of a growing phenomenon with online sales, is kind of to some degree cutting out the middleman, cutting out the online retailer, and allowing manufacturers and wholesalers to sell direct to consumers, to the public, which opens new cans of worms for them in terms of sales tax that they have to be aware of. So it's important to take that into account as well. So in looking at economic nexus, let's talk a little bit about what that is, why it's important, why this kind of came to pass. And the first thing to understand is that sales tax is really a major source of revenue for all states. It's really almost 50% of total revenue. So those of you who live in states that collect income tax, for example, a lot of times we think of that one, right around April, or if you do quarterly filings, those are ones that are always kind of in your face and obvious. But the reality is that it's sales tax that really allows states to be able to offer these services and be able to run their state for their citizens. And while the U.S. economy grows, state sales tax collection has traditionally lagged. And one major reason is that states are losing $24 billion annually from uncollected taxes on e-commerce sales. And so states are essentially looking for ways to increase revenue and the collection of those taxes. And so they're changing laws to tighten nexus obligations, economic nexus being one of those, and they're putting pressure on businesses in the form of increased audits. So for some examples of that, California has hired a total of 100 auditors over the past 3 years to focus their efforts on collecting online sales tax. Idaho hired 48 temporary auditors who are now full-time employees of the state. So unfortunately, the headline with that is that even if you've not been audited in the past, if you're not proactive about compliance, not only having to do with what we're talking about today, but just in compliance with your state's tax laws in general, sales tax laws in general, wherever you're doing business, there's a likely chance that you're going to have an audit exposure in the future. So you got to be proactive about that. You need to know the laws. You need to know where they apply to you and where you should be collecting and remitting that state sales tax. So what is economic nexus? And the answer to that is going to change from state to state based on the laws and the rules they put into place. But generally, it's a tax collection obligation imposed on sellers based on their level of economic activity within the state. So again, having to do with how many customers in that state you service and sell to. And unlike physical presence, it's based entirely on sales revenue, transaction volume, or both. So again, physical presence has to do with where are you physically doing business? Do you have employees? Do you have buildings? Do you have warehouses? Do you have storefronts? This has to do with the sales, the business that you're doing with the residents, the citizens of that state. And again, as I just mentioned a moment ago, like most sales tax laws, that economic nexus criteria is going to vary from state to state. So unfortunately, it's just going to get even more confusing with more states adding economic nexus laws to their present physical nexus laws, with really the aim to level the playing field between non-collecting out-of-state sellers and brick and mortar businesses. So in some ways, I guess it could be said that this is actually good for business, because those who are doing business in the state and collecting sales tax no longer have a competitive disadvantage against those who are maybe working from out of state, selling online, selling again through catalog sales, and not being required to collect sales tax. And just looking in terms of the different states that are starting to implement laws and rules like this, so you can see that this is a visual of states that have various nexus laws in place as of just last month. And you're going to notice that there are a number of states without laws in place, but it's really possible that that's going to change over the next few months. And in fact, highly likely, really. South Dakota was the first to get permission from the court, but several other states are following their lead with similar economic nexus rules. The thought is that the barn door is now open now that South Dakota's law has passed the scrutiny of the U.S. Supreme Court. And so all of these states have different statutory start dates and sales transaction requirements that trigger this economic nexus. So it's important to make sure that you're on top of what that means on however many of these different states that you happen to do business in. And here's just some states that are going through adding laws, or at least putting some that are going to be going into effect here in the near future. Vermont being one that went into effect in July, along with Hawaii. And then those coming down the pipe are Alabama in October, and then throughout the beginning part of 2019 as well. So again, it's important that you stay on top of this. You need to take a look at all the different areas around the country, the different states in which you're doing business, selling to these citizens, these residents, and making sure that you're keeping up with the rapidly changing tax laws. So what should you do now that this has passed the scrutiny of the U.S. Supreme Court? What's your next step? Well, number one, don't panic. There are going to be changes that are going to be taking effect, but what we would encourage you to do is to contact a sales tax attorney or CPA that you might use today, a tax advisor, and seek counsel on all these Nexus related requirements and laws. And if you don't have one, we have an extensive directory of tax experts who could work with you. So we're happy to provide that. These tax experts, these attorneys, these CPAs, many of them are very good friends of Avalara, and we're happy to introduce you to them. And you also could look at leveraging our tax advisory services of our own. We have teams that help determine where you might have Nexus. We have what we call a Nexus study, where we'll go through, look at the business you're doing today, help you determine where you have exposure, and then look at some ongoing monitoring services to see when new Nexus might be established. Because again, it's not just a kind of static activity. Okay, well, it's 2018, I did it going into the second half of the year, so I'm good to go. Well, no, you might have some new sales that register throughout the rest of the year. They're going to trigger some other states where now you'll have Nexus, or maybe laws went into effect that weren't in effect even just a few months ago that you have to be concerned of. So we're going to help you with that, register in those new jurisdictions, and navigate those tasks related to establishing that new Nexus. So again, don't panic. Work with a trusted CPA or tax advisor who knows and understands the sales tax laws, frankly, in all 50 states, or at the very least, all the states in which you're doing business. And short of that, we would encourage you to reach out to us and see if we can't help you in one way or the other. We also have lots of great reference material that you can access as well. This link up above, which I'm quite certain the GSI will distribute this after the fact, so you can reference this, but we have lots of FAQs, Nexus guides, videos and blogs that we're constantly posting to our pages. So it's important for you to be able to maybe sign up for these, subscribe to our email lists, and get the latest news on what's happening related to these potentially Nexus creating activities. So when you look at ways to be able to address these changing laws, one way you can do that is through automating the sales tax compliance itself. Now, manual sales tax management is time consuming, it's also expensive. And even after you spend all that time and money, unfortunately, most believe that auditors are still going to find errors. And so many are spending big money on compliance, but not reducing their risk. And so doing tax compliance in-house really makes as much sense as doing payroll in-house. So there's a lot of companies that have found the value in taking something that's not part of their core business, that isn't a revenue generating activity, and moving it to a third party who is more skilled and more adept at doing it more efficiently. And many companies are finding that in the same vein as payroll, it also makes a lot of sense for sales tax as well. When you look at top performing organizations, 72% are more likely to leverage real-time updates to tax regulatory changes. They're 3.3 times as likely to have automated workflows for tax preparation, filing, and remittance and recovery. So again, really going back to focusing on what is going to help your business be more successful. What are the activities that you can focus on to help grow your business, as opposed to getting bogged down in some of the minutia related to just, you have to do this in order to be compliant. Now, one thing to know as well is that when it comes to tax compliance, and unfortunately just calculating the rates are just a tip of the iceberg. And when they think of calculating tax, they think about the rates, but there's also Nexus, there's product taxability, there's jurisdiction assignments, there's exemption certificates, which are very important as well, and then the state and local tax prep and filing, which can take quite a bit of time based on the different schedules in which you have to prepare and return these documents. And then, of course, audit readiness. So if you do receive a visit from that auditor, or you get notice that one is going to be coming on site, how much time are you going to have to spend finding all the documents and producing those for that auditor to make sure that you, frankly, keep them out of your hair as much as possible. It's important to remember that really any effort spent on sales and use tax compliance and related activities are non-revenue generating. So why not spend your time and effort and resources on areas where you can help grow the business? So talking specifically about Avalara and the sales tax suite, there's ways in which we address these different activities and points of interest related to sales tax that we just discussed a minute ago, and one is Nexus. So with our Avalara sales tax suite, you can actually add these jurisdictions as they become necessary with just one click right within our software. And so whatever tools you're using, whether it's e-commerce, whether it's your JD Edwards system or your NetSuite system that you have to then be able to calculate and hold back and accrue the taxes for these transactions, they'll be updated immediately within your system with just one click. The product taxability. So we have built-in rules and ongoing updates related to different products that may or may not be taxable. One that is really important, probably as soon as this upcoming weekend for many of you, are, say, sales tax holidays for back-to-school items. In a certain window of time, those items are not taxable. You know, does the solution you have today, if you happen to work in an area that sells those types of goods, do you know which ones are taxable and which are not taxable, not only ongoing, but maybe in a particular holiday window that you have to be aware of? And the jurisdiction assignments, one thing to know is that you know, finding jurisdictions using zip codes are really not a fail-safe way to make sure you've got the right address, the right tax rate. Often tax rates can cross over multiple times within the same zip code. And so actually at Avalara, we use what's often referred to as geopositioning, but what it does is uses the full address of the buyer or the supplier based on which address is the one that drives the sales tax rate based on your particular state. And so once we've validated that address, we can then break it down to latitude and longitude to give rooftop accuracy to that jurisdiction to ensure that you are charging the correct sales tax rate. You're not overcharging, you're not undercharging, and getting yourself in trouble on either of those two extremes. Exemption certificates. So exemption certificates, frankly, are they're just like cash in terms of how you need to make sure that you're keeping track of those and that you don't end up having to pay taxes on goods that would otherwise be exempt. And so one tricky area of this is exemption certificates that can be out of date, or perhaps you don't even have one from a buyer who claims that they are exempt. Well, again, similar to just talking about economic nexus related activities, you also can't assume that that certificate is going to be good forever from the day that you accept it and say put it in a filing cabinet somewhere. We're going to help you automate that certificate management. We're going to reach out to those folks that you need updated certificates for, because we're going to identify them as coming up on being exempt and help you manage that process. And then the state and local tax prep and filing. We're going to help you file those and remit those returns to the various states, and then drilling down into the different counties and cities that go along with those. You know, unfortunately, they just don't make it easy. It's not like a federal tax return for most people where just turn it in on April 15th and you're good to go. You're going to have filing schedules throughout the year that all happen at different times. Could be quarterly, could be monthly, could be every 6 months. But you've got to make sure that you're on top of that. And with the Avalara Sales Tax Suite, we can help you automate that, create a schedule for you where the system is going to download information, create your return automatically, and remit that to the state on time to keep you out of the crosshairs of auditors, because that's a quick and easy way to get on that hamster wheel, is to file something late or incorrectly. And then lastly, in terms of audit readiness, we're going to have all that data easily accessible to you at any given time. So electronically, you can go in and pull data for auditors. Here's the other great thing too, is that most auditors understand that when you're using an automation tool like Avalara, they're probably not spending their time very wisely in trying to audit you. Because at the end of the day, an auditor's job is to locate previously uncollected tax from a business for the state. I mean, essentially that's how they justify their employment, right? So they're going to be much better off going to a business that doesn't have an automated solution and digging and prodding and looking for money that wasn't paid, as opposed to going to a business that is using a tool that automates that sales tax collection, because the likelihood of them finding something there is going to be very low. So how does Avalara do it? Well, first thing to understand is that Avalara is completely in the cloud. So essentially our sales tax engine, all 20,000 plus of our customers use that same sales tax engine in order to be able to calculate those rates for the various platforms in which they operate. Also know too that we connect to really over 550 different platforms, different systems, to give you a single point of reference for calculating this tax on all the different platforms that you might use. So it might be your ERP, could be an e-commerce system, a cart, could be a point of sale system, billing, CPQ, all of those can connect into the AvaTax system, allowing you to have a very quick and easy way to calculate those taxes, and you always know that the calculations are going to be the same from one platform to the next. Additionally, all of our tax pros are working and understanding the different rules that are already in place and moving their way through the state legislatures to make sure that the AvaTax cloud is up to date with the correct information to ensure that those calculations are coming through accurately. We talked about certificate capture. So what happens in the process is that the certificate capture system is talking to your customers on an ongoing basis to request new and updated certificates and putting them into a digital format within our platform. And then your system can talk to that platform in order to look at those certificates and make sure that you've got the right customers in your ERP as tax exempt versus the data that we show in our platform. And then lastly, the AvaTax system is also looking at those same customers to make sure that we're returning $0 or transaction exempt transactions into, tax exempt transactions into your system by validating that through the cert capture system. And then lastly, when it's time to file the returns, all the data is compiled into one easy to use location to where all of those returns can be filed. And they're in one place. You can see the schedules and you'll know exactly when they're to be filed, and that Avalara is going to help you do that on time, many times electronically. Sometimes there's going to be certain jurisdictions that are going to require it to be paper, and we're going to help you with that as well. So over 20,000 customers today, and hopefully this puts you at ease. Use Avalara to get tax compliance right. So we are really one of the leading providers of this across all sorts of customers, anywhere from enterprise level to small business. We have customers in nearly every category and nearly every business vertical to help you get this right. It's accurate from the end-to-end tax compliance. It's efficient because we were born in the cloud, as opposed to being a piece of tax software or a tax platform that then realized we need to move into the cloud. We've been there the entire time with real-time updates and sales tax rules and rates. And then, as I mentioned earlier, again, it's integrated into 600 different ERPs, e-commerce systems, CRMs, et cetera, all different ways that you can be able to access this tax data and make sure it's accurate. Now, I know we're going to have some questions here as we wrap up, but Brooke, I'm going to go ahead and hand it over back to you and let you take it from here.
Okay, great. Thank you so much, Paul. That was great. All right, so before we get into the question and answer session, I just want to follow up on a few items, and then we will move into the question and answer portion. Our webcast today is a part of our free ongoing educational webcast series, and our upcoming webcasts are currently listed on the screen. And if you'd like to register for any of these, you can go out to our website at getgsi.com, and you can select on the menu news and events, and then you can access the schedule from there. And if you'd like to sign up for our weekly emails on upcoming webcasts or our monthly newsletter, you can go to getgsi.com, go to the bottom of the screen, and then click on the link for each. All right, Paul, I see that we do have a few questions that have come in, and I just want to remind you that if you'd like to submit a question, you can do so using the questions panel on the GoToWebinar console window on the right side of your screen. And if you minimized your console earlier, please click the left-facing arrow to redisplay the questions panel. Okay, so all right, first question is from Maureen, and she said, are you integrated with SAP?
We are. Very good question. Yes, absolutely. We're integrated into SAP, and we'd be happy to get you introduced to someone who can talk to you specifically about your system, whether it's B1 or one of the other kind of larger enterprise level systems, and talk to you about how we connect to that.
Okay, great. And the next question we have is from Mark, and he says, what is something that I should do now to prepare for these changes?
Yeah, good question. And having covered a little bit in the slides, I mean, the first thing I would say is, again, don't panic. This is going to be changing rapidly, but I think really the best suggestion that we could give you is to find someone that you trust, a trusted professional in the sales tax field. Again, could be a CPA, could be a tax attorney. We'd also encourage you to reach out to us. And if you'd like to reach out to GSI, they of course would get you in touch with someone on our tax team, and then we could set up that Nexus study, because I think that's really a very good first step. Any one of those three parties, again, whether it's a CPA, tax attorney, or Avalara helping you, a Nexus study is really something that you need to take a look at and see what sort of exposure you might have today and going forward.
Okay, great. Thank you. Next question we have is from Sandra, and she said, how long would it take to implement Avalara if we wanted to get ahead of this?
Yeah, good question. And it's really going to depend a little bit from system to system. Just talking a little bit in terms of the various Oracle systems. So the good news is that in most of the platforms in which we operate and connect to, we actually have pre-built connectors. So what that does is it reduces the implementation time that's going to take to get our AvaTax Cloud and the two other systems we talked about, certificate capture and the returns filing, all connected into your platform. I would say that an average implementation is going to be somewhere from 3 to 6 months for a customer, and many times that can go either way based on the complexities in your system or how tailored we need to help you with it.
Okay, perfect. And it looks like we have one last question from Jamie, and Jamie says, can you give a rough estimate of what Avalara would cost?
Yeah, and I don't know that, again, it's going to vary from client to client. I can't really give you a rough estimate of what it will cost, but one thing that's important to know is that the Avalara pricing is based on the tax transactions that we help you execute within your system. So there are other solutions that are what I would call license-based. So it's the number of people that you have on the system or the number of platforms that you're connected to. But at the end of the day, outside of the implementation, which there's some professional services fees that go with that, outside of that, it's just simply based on the number of transactions that we help you with. So it becomes highly scalable, whether you're a small business or enterprise level, to be able to put together pricing that really makes it much more cost effective to let a third party like Avalara take this off your plate instead of having to manually do it yourself.
Great. Perfect. Well, thank you so much, Paul, and everybody for your questions today. And as a quick follow-up from today's webcast, we ask that you complete a short 1-minute survey when you exit. You will be receiving an email with a link to our resource center on our website where you can access the recording from today's webcast as well as a copy of the presentation. And after today's webcast, we will do the drawing for the $25 Amazon gift card. And anyone that attended the entire webcast and completes the survey will be eligible, and we will notify the winner. So thank you again, Paul.
Yeah, thank you, Brooke.
Yeah, and thank you everybody for attending, and we hope that you have a great day.